Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is November the 30th. It is the last day of the month, so traders are taking profit. Lots of other stuff going on. And I think what I'm going to do today is not spend any time talking about the market crashing and the Dow being down 500 points and stocks fall, travel shares drop as, Micron concerns resurge, etc. Let's skip that one for a minute and talk about some things that are more meaningful to us in terms of helping you out with different strategies. You know, I have made videos before about things like diversification. In fact, there's a video in my library that says Diversify, damn it. And I've also made videos on tools that you can use like trailing stops. There are a variety of things that you can use as a hedge or as protection in situations where the market drops or makes quick adjustments as it has done over the past few days. Well, what I'm going to do is I'm actually just going to take you into my total equity portfolio. And this is my money. In other words, I'm not talking about clients' money. I'm not even talking about my hedge fund. I'm only talking about my personal investments. And I'm going to show you this pie chart in some detail. And then we're going to talk about some of my losers and some of my winners, because just in case you think that every stock I pick is a winner, I do want to share with you that from time to time, I'll also pick losers. If you look at this pie chart over here, despite the fact that many of you will know me or have affectionately called me Mr. Oxy, so I kind of just stuck with it. Oxy is actually not my largest position by a long shot. In fact, my largest positions include some financials like AllianceBernstein and TD Bank. TD is an acronym for Toronto Dominion Bank, and AB is AllianceBernstein. Right now, I also hold a chunk of cash because I want to have some dry powder available and ready in case I want to buy something. Other large positions that I have include Sun Life. So SLF is Sun Life over here. And of course, I have large positions in energy stocks. So collectively, my energy stocks and my financials are sort of 50-50, being equal in terms of weighting. In other words, what I'm saying is most of my equity portfolio is in financials and energy. If I have to split that up and then talk about the rest, I'd say it's sort of 40% financials, 40% energy, and the other 20% is a mix of a variety of different things. But I'm going to kind of walk you through that, and I won't take too long. So this is the portfolio by sector, right? So if you look at my total portfolio right now, this is the financial section here, this light blue section. This is energy, so a little bit smaller than the financials. It's also because the financials have been performing slightly better. And then the ETFs, I have a couple of ETFs. I'll tell you what they are in just a minute. I have some industrial conglomerates and some REITs and things like that. And then I have uranium, which is a nice chunk of my portfolio, but relatively new. In fact, it's one of my better sort of pies in the pie chart in terms of recent performance. Talking about uranium, my largest position is actually a relatively safe position in Cameco. So Cameco trades on the Toronto Stock Exchange as CCO, and in New York it trades as CCJ. My second largest position is Paladin, which is an Australian miner, and GoviX, which is a Canadian one, Energy Fuels, which is a US one, and then Denison Mines. I've added to a couple of these, by the way. Even last week I bought some more GoviX and Denison. I think that was all. I might have also bought some more Energy Fuels if I have not added to that position yet. I actually intend to add a little bit of money to Energy Fuels, which is UUUU. In my industrial conglomerates and REITs and things like that, I have pretty much just a few holdings here. I have a large position in AG&C, mainly because of the dividend. Pays a very large dividend, so this is one of my foundational stocks. I built up a huge position in ICANN. Timing's not good on that one. It's one of my losers, but I'll get to that one in more detail in just a second. HR.UN is actually another REIT. So half of this portfolio here is actually in high dividend paying REIT. And then I have 3M, which is a legacy holding for me. I've been long in 3M for a long time. and rode its ups and downs. Other positions, so cash is a large position for me right now, but I have some other stocks. So Bell Canada is a large one. So BCE is Bell, it's a technology company. And then I have my SPY position, and a new one that I just opened recently is Sibanye Stillwater, which is a mine from South Africa. So this pie chart doesn't match the four tickers at the bottom, and that's because I didn't show you cash once again. How about energy? The total pie chart for energy looks like this. Oxy is certainly one of my largest positions, but similar in weighting to Enbridge and Pembina. Now, Enbridge and Pembina are both sort of foundational stocks for me. And both these two Canadian energy companies offer me a hedge in terms of diversification, especially Enbridge. Enbridge is everything from drilling to midstream and upstream, but also the natural gas utility and pipeline operator, and it's a very diverse energy stock. And both these guys, Enbridge and Pembina, pay me a dividend of 6% on an annualized basis, and Pembina is nice enough to pay that dividend monthly as opposed to quarterly, which is more common. The other large yellow pie over here, slice from the pie, is Total, the French super major. And then the newer positions that I have in my portfolio include Harbour Energy and Petrobras, which I just added. Petrobras I added most recently, and Harbour Energy I've been long in since August. How about my financials? So here I have a couple of stocks that make up the bulk of it. So 4 of them, in fact. So the blue pie is, or slice, is AllianceBernstein. The big brownie beigey colored one here is TD Bank. This is Sun Life Financial, which is an insurance company. And this is Bank of Nova Scotia. So 2 retail banks here are Canadian. So TD Bank and Scotia Bank are 2 Canadian banks. This is a life co. AllianceBernstein is an investment management firm. And this little slice over here is a US financial institution. If we look at the performance of the different sectors, so as I said, I am mostly invested in energy and financials. Over the last 6 months, it's returned a fairly decent return, even compared to the S&P 500. My financials kind of track the S&P 500. The energy has outperformed. But if you look over a longer period, energy has significantly outperformed everything else, and so has financials. The only one that I miss sort of in my portfolio is information technology. But as I said, I hold a couple of ETFs, and one of them is SPY, which is heavily weighted in information technology. So I cover the top 3. And what I try to do, just from an investment management point of view, is I try to avoid being here at the bottom. So despite the fact that, for instance, Pfizer and Moderna have been off the charts in terms of performance, mainly as a result of their vaccines, healthcare stocks have been underperforming collectively as a whole. Now, you may recall, if you've been following me for about a year or so, that I actually exited my entire Pfizer position late last year, and took the profit off the table. And that was good timing. It was just a stroke of luck. It wasn't planned that way. My Pfizer position was up about 40% or so. I cashed out and decided I'm going to take a wait and see, or adopt a wait and see strategy for healthcare stocks. I didn't get back in at all. So I mentioned SPY, and also have VYM, which is a ETF. And those two do have some pharma stocks in them, for example, Johnson & Johnson, Pfizer, etc. But I actually stayed away from healthcare, and kind of luckily I did so, because even though Pfizer has done well, initially it did not do well. They botched that vaccine rollout pretty badly, and the stock took a tumble down into the high 30s. I think it was $36 or something at one stage. And now it's back up to over 50, so it's doing okay. And of course, Moderna has just made a whole lot of people really, really wealthy, so I missed that one. Anyway, I tried to kind of avoid being at the bottom of the sector performance on an ongoing basis. What are my losers? So my first loser is ICANN Enterprises. So this limited partnership, which, despite the fact that it pays a very, very cool dividend of almost 16% at the current price, now has a PE ratio of 275, With a PE of 275, I would not even buy ICANN with your money. And if you look at the performance, ICANN was actually a top performer at the beginning of the year and just crashed and lost its way completely as the year went by. So compared to this purpley blue line over here is the S&P 500 performance year to date, and this is ICANN. So ICANN absolutely sucks. So this was one of my worst picks, but trading at its 52-week low is probably a good opportunity for me to actually add to that position, depending on where I want to allocate my cash weighting investment. Another loser for me is one of those foundational stocks, Sun Life. It hasn't done too badly. It's kind of tracked the S&P 500, but it's underperforming in terms of where we are right now. Still cheap with a PE of 11 and a nice dividend of 3.2%. 11 PE as a general rule as a starting point is an entry point for me. So I would look to potentially buy in if I didn't have a position, but I wouldn't add to it right now. And anyway, I have a large position in Sun Life and have had it for quite some time. Enbridge is another one. It's just above my PE ratio where I typically open a position in the stock, which is generally below 15. Huge dividend of almost 7% at the current price. And Enbridge, for most of the year, outperformed the S&P quite comfortably. And recently, along with all the other energy stocks, just crashed and is now underperforming the S&P 500. Don't ignore the dividend, guys, because I know we're all looking for growth stocks, but at the end of the day, this video is about diversification, and you can even view a high-paying dividend stock, especially in the case of ICANN with its 15, 16%, or in this case, Enbridge with 7%, as a nice little hedge against a potential stock decline. How about Oxy? Your favorite stock and mine has outperformed the S&P 500 comfortably. So there's not really much to talk about in terms of Oxy right now. Would I buy more at $29? Probably not. Would I buy more at $25? Probably yes. But where's it going next? $25 or $35? Maybe it's going to 35 before it goes to 25. So at this stage, I'm not particularly interested in adding or selling Oxy. I'm comfortable to just hold the position and see where we go. TD has been one of my better performers, so I already shared with you a couple of losers, so these are winners. TD is actually priced at a PE of 11. On a forward ratio, it's actually a stock you could potentially get into right now. Pays a dividend of nearly 3.5%. It's a good, stable bank. Canada only has 5 major retail banks. Toronto Dominion, TD is one of them. The others are CIBC, Royal Bank of Canada, Scotiabank, and the Bank of Montreal. I have 2 of them, Bank of Nova Scotia and Toronto Dominion Bank, or TD Bank, in my portfolio. I like TD more than Bank of Nova Scotia. Having said that, though, Bank of Nova Scotia or Scotiabank might have more upside than TD. But again, this is a foundational stock for me that I just hold. AllianceBernstein, if I had to say this is one of my favorites, it's been one of my favorites just because it's outperformed pretty much anything else in terms of the financials. Its PE is still priced at 15, which is sort of a range where you could potentially look to open a position. Its annual dividend yield, almost 7%. This stock has been really good for me. I have had AllianceBernstein in my portfolio for about, I don't know, between 3 and 5 years, probably more likely 5 years than 3 years. But anyway, that's what that looks like. So guys, this is kind of sort of an overview of the pie chart of my personal investments and where I'm at and what I'm doing. As you can see, I have a very diversified portfolio of many different stocks, despite the fact that I still remain Mr. Oxy. Many of these stocks are high-yielding dividend stocks, which creates a bit of a hedge. Diversification creates a bit of a hedge. You can sell covered calls. You can implement some trailing stops when you are in a very profitable situation. There are many things that you can do to hedge your bets. But I'm going to leave you with this, because basically there are only 2 rules that you need to remember. One is, don't lose money. Rule number 1, don't lose money. And rule number 2, don't forget rule number 1. So on that happy note, guys, I'm wishing you the best of success. These fluctuations happen in the market. Today is the last day of the month. Traders are taking profit for sure. I would book some profit too if I was trading, but I'm not. I'm an investor. So on that happy note, this is Mr. Oxy signing off saying thanks for watching. Bye-bye.